This is the Random Writing Series by Duenas. Today we will address the cost of credit and the price of freedom. They say a high credit score is the ultimate badge of financial success, a golden ticket to low interest rates, bigger loans, and endless opportunities. But what if that glowing number isn't a sign of freedom, but a quiet contract of servitude? What if the very system that rewards you for borrowing more is the same one that limits your ability to live freely? In this video, we're going to challenge everything you've been told about credit, debt, and freedom. Because the truth is, every time your credit score goes up, your future might be getting sold off in small monthly payments. Let's talk about how the price of long-term debt could be the very thing keeping you from true independence. Let's explore the inverse relationship between credit score and personal freedom. In modern capitalist societies, the credit score stands as both a gatekeeper and a symbol, an indicator of one's financial trustworthiness, but also a subtle mechanism of control. While credit scores are intended to reflect financial responsibility, a closer analysis suggests that they may inversely correlate with individual freedom. In other words, the higher your credit score, and the greater access you have to long-term debt, the more restricted your actual freedom may become. This essay argues that the credit system, particularly through the vehicle of long-term debt, gradually erodes the practical ability to protect and expand personal freedom. 1. Debt as a form of modern bondage. Debt, especially in the form of long-term obligations such as mortgages, student loans, and auto financing, is frequently praised as a stepping stone to upward mobility. However, this very structure often functions as a form of economic entrapment. By tethering individuals to recurring monthly payments over decades, debt restricts their choices in employment, location, lifestyle, and even family planning. A high credit score facilitates easier access to this debt, and also to fulfill the American dream. Paradoxically, it is the most creditworthy who often accept the heaviest shackles. While someone with a low credit score may face higher interest rates or limited loan options, the individual with a high score is seen as a prime candidate to take on greater liabilities. These liabilities, once assumed, become obligations that narrow the scope of future choices, whether it's the ability to relocate, take a lower-paying job with greater meaning, or pursue entrepreneurial ventures. 2. Creditworthiness as a proxy for conformity. Credit scores do not measure financial wisdom or economic independence, they measure compliance. Paying bills on time, maintaining revolving debt, and adhering to lender-friendly behavior are rewarded. However, financial independence, owning assets outright, avoiding debt, or choosing to live modestly without credit, can paradoxically lower your score. Thus, the credit system punishes autonomy and rewards dependence. True freedom entails the ability to say no, to walk away from exploitative work, unjust systems, or toxic relationships. But the credit system cultivates a population that must say yes to maintain access to the financial lifelines they've come to depend on. Again, the American dream. The freedom to opt out, a hallmark of autonomy, is eroded in favor of participation in a cycle of borrowing and repayment. 3. Psychological chains, debt-induced anxiety and learned helplessness. Beyond the economic constraints, long-term debt fosters a psychological environment steeped in stress, anxiety, and fear of default. The longer the debt term, the more future income is already spoken for. This diminishes a person's ability to adapt to changing life circumstances, pursue passions, or recover from setbacks without catastrophic consequences. The pressure to maintain a high credit score becomes an internalized form of surveillance, where the debtor polices their own behavior, curbing risk-taking and innovation. Moreover, the long-term nature of debt indoctrinates a mindset of learned helplessness as the foundation to be chronically poor. People begin to accept that decades of debt is normal, even virtuous. The idea of being truly debt-free becomes an abstraction or luxury, not a baseline of freedom. 4. Freedom is not funded, it is owned. Freedom cannot be mortgaged. It must be owned. A society where mobility, education, and healthcare are largely accessed through credit is one where freedom is leased, not lived. True freedom involves not only the capacity to act, but also the absence of undue obligation. While credit can offer short-term access to opportunity, it often does so at the cost of long-term autonomy. This can be viewed as trading freedom for comfort. The most genuinely free individuals are not necessarily those with perfect credit, they are those with no creditors. They can change course, challenge norms, and exit systems that no longer serve them. The higher the credit score, the more deep-seated one often is in systems that commodify time, labor, and potential. 5. Redefinition of financial health and freedom. To reclaim the relationship between financial health and personal freedom, we must begin by redefining what it means to be financially secure. Independence should be measured not by access to more debt, but by the absence of it. Again, it is the absence of debt what defines independence, financial health, and freedom. A high credit score should not be mistaken for financial strength if it represents decades of indentured repayment. Instead of asking how good one's credit is, we might ask, how free is this person? Can they quit their job and be okay for a year? Can they move without penalty? Can they afford to speak up, take a risk, or live on their terms? Conclusion. The credit score, often heralded as a badge of financial responsibility, masks a deeper and more troubling reality. It incentivizes and rewards prolonged indebtedness, which inherently compromises personal freedom. In a system where economic participation is largely structured around borrowing and repayment, the very tools that promise upward mobility may in fact be forging invisible chains. To maintain a high credit score, individuals must demonstrate unwavering compliance, timely payments, stable usage, predictable behavior. Yet this obedience comes at the expense of adaptability and autonomy. One cannot easily walk away from a job, take a sabbatical, or radically shift their life trajectory when long-term debt obligations loom like ever-present anchors. What is often perceived as financial credibility may actually be a measure of how deeply one is entrenched in a system that prioritizes consumption and conformity over liberation and sovereignty. This calls for a re-examination of the values underpinning our financial culture. If the ultimate goal of economic life is not merely survival but meaningful self-determination, then we must challenge the notion that access to credit is synonymous with success. True financial health should be redefined not as the ability to borrow more, but as the capacity to owe less, or nothing at all. Moreover, this critique must extend beyond personal finance into the societal structures that normalize and institutionalize dependency on credit, housing markets that all but require mortgages, educational systems that push students into lifelong debt, and healthcare infrastructures that can bankrupt a person for falling ill. These systemic pressures force individuals into cycles of repayment that can span decades, with each monthly bill serving as a quiet tax on their freedom. In contrast, freedom is not something that can be financed, it is something that must be cultivated, protected, and, above all, owned. It is the ability to say no, to pivot, to live life on one's own terms without financial strings attached. It is the right to think independently, act boldly, and make decisions not out of fear of economic retaliation but from a place of inner alignment and sovereignty. Therefore, in evaluating our relationship with money, success, and independence, we must be willing to confront the uncomfortable reality that the systems designed to reward financial compliance may, in fact, be trading long-term autonomy for short-term access. To be truly free in a credit-driven world may require us to swim against the current, eschewing the debt-based definition of success in favor of a leaner, more liberated path. Freedom, after all, is not found in a FICO score. It is found in the space between obligation and opportunity, the space where one is no longer owned by their past decisions, but empowered to shape their future on their own terms. Today we explored the cost of credit and the price of freedom, from the Random Writing series, by Roy Duenas.